So good morning, everyone. I am Christina Moffett, Director of Small Business Resources for the Greater Des Moines Partnership. We're so excited to have you here virtually with us today to kick off the 2021 year with Top 5. And we're excited to have Courtney Duran here with us. She is a managing partner at TDT CPA and Advisor, which is a boutique advisory firm and accounting firm for small businesses and nonprofits. Courtney has been with us multiple times and helped us deliver information, so it's so great to have her back. An exciting fact about TDT is they were just awarded Forbes' Best Accounting Firm for 2021. So we definitely have the expert and the best on hand today. I know that this year has been super stressful on small businesses, and they often feel overwhelmed, and their goal is to really create successful leaders that understand and maximize their financial information. And she has proven that over and over again. So Courtney, I am going to go ahead and turn it over to you. Thank you so much for being back with us again. And we have a full class today. So again, a reminder, if you can please leave your cameras off and your mics on mute and type those questions below, I will make sure to pop on the screen and get your questions over to Courtney. Courtney, handing it over to you.
Good morning. Thank you, Christina. I am so happy to see all of you. I guess I can't really see you, but I can see that you're here. I'm glad you're joining us this morning to kick off the Partnership's Top 5 for Small Business series. So today we are talking about 5 financial blind spots. Really, I want you to first start out, just imagine you are cruising down the interstate, enjoying the sunshine. Maybe you're listening to your favorite podcast and you approach another vehicle that's going slower than you'd like to go. So, you check your mirrors and you start to move into the left lane to go around them, and a horn blares and you quickly return to your lane, flustered, heart pumping. You realize another car was in your blind spot. So maybe like this picture that you see here, maybe your vehicle has a blind spot monitoring system to alert you when something is out of your view. Maybe it beeps, flashes, pulls you back into your lane. Mine does, and it's saved me more than once. What I think we need to be really thinking about with this blind spot monitoring system is how it alerts us to things outside of our view. Does anyone know, I want you to put it in the chat, does anybody know which automaker invented the 3-point seatbelt? Put it in the chat, put your guesses in the chat. By the way, as we go throughout, if you have questions, if you have comments, put them in the chat, and we're going to get the chat download later from Christina, and we're going to send out some gifts to you to thank you for attending and for participating in today's event. So put your ideas in the chat, and maybe you'll get a gift from us. We love to purchase things from our favorite small businesses in Central Iowa, and we're going to send those things out to you, to a few of the participants today. So here's your first chance. Oh, look at all those people. Volvo, Ford, VW. It is Volvo. So Volvo years ago was the first to invent the 3-point seatbelt. They are known as the safest cars on the road. The seatbelt and other features they put into their cars early on were designed to reduce the chance of death or serious injury. And that's part of their mission as a company, is to reduce or actually their mission is to eliminate deaths within their vehicles. So, most of their early on work was around features like the seatbelt or airbags that would minimize death or minimize injury or reduce the chance of death. As time goes on, they have innovated to create a blind spot monitoring system. So they are trying to not just minimize injury or the chance of death, they're trying to just prevent the accident from happening in the first place. They are creating technology to alert you to something that you don't know is there, because this happens to all of us, right? We've all been there. I know I've been there. You looked in the mirrors, you thought everything was fine. And then once you get out of your lane, you start to see something is here that I didn't realize. So this presentation, these top 5 blind spots, is designed to be your blind spot monitoring system for growth stage businesses. These problems that we talk about exist. They're very common. It doesn't mean there's something wrong with you. It means that you are growing. And as your business grows, there are unique challenges and opportunities that come up. And just when you think you've figured out how to navigate one stage, the growth and scale that you work so hard to achieve results in a whole new set of challenges that you didn't anticipate. And those are blind spots. So this presentation is going to serve as your blind spot monitoring system as we talk about these top 5 blind spots of growing businesses. Thank you guys for participating in the chat. We'll have more opportunities to do that as we go throughout. All right, so now you know why we're talking about blind spots and steer assist for your business. So let's get into the first blind spot. For each blind spot, I'm going to tell you kind of what the blind spot is, how do you know if you have it, and then most importantly, what you can do about it and where to start. So that's going to be the rhythm of our presentation. All right, so first, you've reached your limit and you know there's got to be a better way. Anybody feel like this in the chat? Like you are doing all the things, right? When you start out in your business, you succeed by digging in, figuring things out, learning from your mistakes, and that's tremendously valuable. But as you grow, you start to reach the end of your capacity or your capability. Anybody feel like that right now? Anybody felt like that in the past? Like, I can't do all this anymore. I'm growing and the demands on my time and energy are too high and I don't even know what to do, or I don't know how I can get all of this done. So this problem comes when you start to reach the end of your capacity and your capability. You're carrying out roles and responsibilities within your business that really don't match your skills and desires. Think about it this way. If someone wouldn't pay you to process payroll or keep the books or design your website, screen resumes, interview candidates, if somebody wouldn't pay you to do that for them, your business probably shouldn't be paying you to do those things either. Now, when you're in startup mode, you got to do all of it. But as you grow, we're talking about growth stage blind spots. As you grow, you have to start thinking about what is it that I need to do differently when you reach the end of your capacity and capability, when you feel like you've reached your limit. This is a blind spot that comes up and you have to start thinking differently. So what do you do about it? There are 3 main things to think about here. You want to automate your processes, look at functions you can outsource, and then clarify roles and responsibilities. So your greatest contribution to your business is what you are best at and most passionate about. All the other stuff should be handled by an appropriate mix of contractors, outsourced resources, and employees. You just have to have clearly defined processes and procedures in place so that they can do it the way that you want it to be done. So I know a lot of business owners and entrepreneurs don't really like the idea of processes and procedures. Most entrepreneurs thrive on innovation and figuring things out. It doesn't mean that you as the business owner have to be the one writing out all of these processes and procedures. That's even something that you could outsource to somebody else. That's kind of the point of this whole blind spot. So lots of business owners start using outsourcing or adding employees to start handling certain specialized roles. So you've got to think about what is your biggest contribution to your business? What are you the best at? What are you the most passionate about? And then look for ways for other people to handle other functions, either through outsourcing or employees. So here's how you can start. Look for ways to increase efficiency, get access to new expertise, or optimize your processes. So what things can you outsource? What things can you automate? What is taking a lot of time for you and your team to do manually? A lot of those things can be automated through different technologies or just routine processes. Leverage existing technology applications, look for ways you can integrate softwares, and most importantly, clarify who is doing what and how they're supposed to do it. Clarify those roles and responsibilities. So that's the first blind spot. Everybody with me so far? Maybe drop something in the chat. Anybody feel like this is your blind spot, or maybe for a friend, a business owner who has this blind spot if you don't want to own up to it yourself? No shame here. Like I said, these are things that exist in growth stage businesses. We've been working with small business owners for 45 years. These things come up all the time. It's just part of growing. And so this is an opportunity for you to see something that probably exists before you slam into it, right? So this is part of your blind spot monitoring system. All right, so we got to keep going here. Number 2, your gut feeling for what's happening in your business is no longer accurate. All right, so a lot of times business owners have in their heads an expectation of what the numbers should be. As you grow and scale and have more people doing more things in your business, you can start to lose touch with what's actually happening in your business. There's more activity going on that you just weren't even really directly involved with. So sometimes the financials are wrong. Sometimes there's transactions that haven't been recorded, there's adjustments that are needed, but a lot of times the financials are correct. It's the calculations in your head that don't account for everything that actually occurred. So as you grow and scale, you just can't keep all those details in your head anymore. So what can you do about it? You've got to have accurate accounting. You have to have relevant reporting, and you need to know your margins. So most of the time, a business's accounting system needs to be restructured so that you get meaningful information. So you started your business and you used the default chart of account from QuickBooks. That's fine. Maybe as things as you grew over time, your bookkeeper added a new account, every week or so, and you've got this huge long profit and loss statement. Almost without exception, your accounting system needs to be restructured to make sure that you are getting relevant information. You have to really start out with thinking about the big picture and the end in mind. What are the reports that I need to know? What are the main components that I need to know from my accounting system? One of them that I would suggest is knowing your margins, being able to tell from your financials without a lot of manipulation and extra spreadsheets, how much money are you making on your primary products or services or main divisions of your business. So you have to have accurate, timely accounting, and it has to be, and transactions to be entered in a level of detail that you can report out relevant information like margins, like profitability per division. So you can no longer keep all this information in your head, which is a good thing. That means you're growing. You're not responsible for everything. You're not involved in every detail of your business. But you can't just fly blind, and you can't continue to trust your gut, because your gut's probably not going to be an accurate representation of what's actually happening. So where do you start? Start by making sure you have accurate, timely financial statements, and evaluate what needs to change within your system of accounting to make sure that those reports that you get from your accounting system are actually helpful and relevant. So maybe you need to change up your chart of accounts. Maybe you need to change how transactions are entered. You think about, can you quickly and easily tell your sales mix? Can you tell your profit margin by product or by service? Do you have a profit and loss by main profit center, like location or division? And are your expense categories on your P&L relevant? Is there way too much detail? Is there not enough detail? Think about these things so that you have the information that you need to see how things are going in your business, because as you grow and scale, this is a blind spot that will happen upon you. You won't be able to keep it all in your head any longer. All right, on to blind spot number 3. You are spending a lot of time putting out fires instead of preventing them. Anybody want to admit in the chat that their business card should read firefighter? I know as a small business owner myself, as managing partner and an owner in my firm, this is very common. We feel like we are constantly putting out fires. As you grow, you're going to end up spending a lot of time putting out fires if you can't start finding ways to prevent them. As you add more people, more activities, more things going on in your business, it can get really hard to identify underlying issues. And you can start to wonder if you're fixing problems or symptoms. So I want to tell you a quick story. Maybe you've heard it, the parable of the river. Has anybody drop it in the chat if you've heard the parable of the river? So this tells of a group of campers settling on a riverbank, and one camper notices a baby in the river. So he jumps in, saves the baby. Then one of his friends spots another baby in the river, and another. And so these campers are frantically rescuing as many babies as they can, but there are so many, and they know they can't save them all. So at one point, one of the campers gets out of the river and just starts walking upstream. And all of his friends are like, "What are you doing? Where are you going? Look how busy we are. We need you here." And the camper replies, "I'm going upstream to find who keeps throwing all these babies in the river." You have to deal with the acute issues in your business. You have to put out the fires, save the babies, but you have to find a way to prevent or at least more quickly detect future issues, or you're going to be constantly putting out fires. So what can you do about it? Name those fires. Think about what are the issues happening right now in my business that are taking my time and attention from the main priorities that I really need to be working on, or the main priorities of my team. So name those fires. Think about the different areas of your business. So finance, customers and sales, operations, people, your goals. What are all the problems or the fires that are raging in those different areas of your business? And start to look upstream. Drill down into the underlying issues. So most of what those fires are symptoms of other problems. So I'm going to give you an example. A common problem, a common fire that you fight as a small business owner is tight cash flow. So maybe your sales are plenty high, your margins are strong, but it's taking you too long to collect payments from your customers. So a lot of people would measure receivable days. Like, how long does it take for us to collect payment from our customers? If you are just going to be looking at receivable days and identify that as a problem in cash flow, you're not going to be able to change anything unless you look upstream. You have to drill down into the processes around collecting from your customer and figure out what are the underlying issues, what are the upstream causes of this problem. Measuring and monitoring the number of days in receivables is not going to change your results. So what could an underlying activity be for receivable days problems? Maybe it's taking your team way too long to invoice your customers. Maybe your invoices are full of mistakes, and so customers won't pay them until a corrected invoice is issued. Those are just a couple examples of underlying causes. So a problem is cash flow. That's just a symptom. The fire is cash flow. That's a symptom of an underlying problem. So you have to drill down to those underlying activities that are happening in your business. Then the third thing you do is start measuring and monitoring those activities. So you can keep watching receivable days, but start watching the number of days it takes to get invoices out the door, or start monitoring the percentage of errors in invoices if those are your problems. So those are examples. You have to drill down to those underlying activities. Think upstream leading indicators. The financial statements, like we talked about in number 2, financial statements tell you what's already happened. Blind spot 3 is really starting to predict what will happen and measuring and monitoring underlying activities and upstream issues while you still have a chance to change the outcome. So find those underlying activities of your big raging fires and develop measures around those and start measuring and monitoring those items. All right, number 4, you have more cash than you're used to, and you don't want to waste it. Who would love to have this problem? I'm sure this is an easy one, right? This is an easy one to put in the chat. Get yourself a chance to win a gift to one of our favorite Central Iowa small businesses. Who would like to have blind spot number 4 be their problem? Normally we talk about cash flow problems, like I did in blind spot 3. You don't have enough cash to cover your obligations. But as your business grows and you become more profitable, you can find yourself with excess cash. So maybe you're thinking, well, is that really a problem? It actually can be, because when things are going well, it's easy for costs to creep in. It's easy for inefficient processes to become status quo. It's almost like the comfort of having excess cash can undermine your own success. So here's what you can do about it. Create a budget. And I know you're all saying, create a budget. Budgets are for when we don't have enough money, right? We need to stretch our dollars because things are tight. And budgets are certainly effective in that case. But ultimately, the purpose of a budget is to create a plan for how you're going to spend your money, whether you have a lot or a little. So just because you have plenty of cash doesn't mean you shouldn't use a budget. And it doesn't mean you shouldn't scrutinize your spending habits. Look for opportunities to increase revenue or decrease expenses. When you create your budget, you want to evaluate the profitability of your products and services and make sure that you have systems in place to maximize that revenue and to minimize those expenses. When things are going well, it is easy to let those excess costs come in or to get less focused on profitability because things are just cruising along and going well. The last item I would say here that you can think about is take advantage of business credit cards. A lot of business cards will reward purchases that you're already spending anyway. So I'm by no means promoting racking up a bunch of credit card debt. So you're going to use a card and then pay it off. You can pay it off every month, every week, however frequently you want. You're not racking up a balance that you're going to pay interest on. You're just utilizing a card to make purchases that you would already make anyway. It allows you to control the timing of your cash outflow, and it can provide rewards or travel points. And so there's lots of different cards and categories and bonuses and annual fees. So you want to make sure you select the one that's right for you and the rewards that really are relevant and important to you. But this is something that if you're not using a card or you're using maybe the card that's not the best for you, you could be leaving money on the table. So those are the 3 things to think about if you are finding yourself with more cash than you're used to. You can also just think about as you create that budget, are you paying yourself appropriately as the business owner? Like, have you adjusted your compensation coming out of the business accordingly? Are you setting aside enough cash for reserves? You being intentional about investing in research and development for your business? Maybe you want to be more generous and contributing to retirement for your employees. Maybe you need to add more people or have an outsourced relationship, like we talked about in Blind Spot 1. Maybe you've been doing all this and you're burning yourself out when you really have enough profitability to support adding additional employees and adding some outsourced relationships to take some of the burden off of your own time. So those are some of the things you can think about when you find yourself with this very desirable problem of having more cash than you know what to do with. All right, the last blind spot number 5. You have a vision for your future, but you're not sure if it pencils out. Okay, so as business owners, we often are really good at the vision part of it. Most entrepreneurs are very visionary and love to think of ideas and think through strategies of how to get there. But without taking one more step to crunch the numbers, it can be really hard to be confident about your strategies and whether they will actually get the results that you're planning on. So you have to use some form of financial modeling to support your strategy. Otherwise, you're relying on a strategy of hope. And as I'm sure you've heard, hope is a wonderful virtue, but not a very effective strategy. So what can you do about it? Set some specific goals. Be specific. You can't just set some generic goal to increase revenue. Instead, maybe you want to set a goal to increase the average revenue per customer from $1,000 to $3,000 within the next year. Maybe you want to shift your sales mix for a certain product to raise the sales mix of that product from 50% to 85% over the next 5 years. Set some specific measurable goals and then brainstorm the various strategies that you could employ to achieve them. And you have to do the math, build your assumptions. And this is where I think it's blind spot number 2, that accurate, timely, relevant financial information becomes so crucial, because if you have that, you can start with that historical financial information as a basis for applying assumptions to. So this is what happened. This tells us what already happened. Then we apply assumptions to that information. If we do this, we think this will happen. And you start to predict and forecast and project where you could go. And what we often find is that business owners either have way too generic of a goal, so it's hard to know if you even achieved it, which sometimes maybe that's what you're going for. Like, oh, well, maybe I can't be held accountable to this goal, or I leaves me some room to adjust and change the goal as we go. But if you're really, truly trying to achieve something specific, you want it to be specific enough that you can measure it and that you have a time frame that you can monitor against. And you need to apply those assumptions to it and then pencil it out. Oftentimes we find, like I said, either it's too generic, so you can't even pencil it out because you don't really know, you haven't clarified what you're really trying to do, or it's wildly unrealistic. So I'll give you an example. This is something that I did last year in our firm. So as managing partner and director of business development, one of my roles is to set the revenue budget for the firm. So I look at, what did we have last year? What do we have for clients that are continuing engagements that we'll work on again? And then how much new work do we have capacity to take on? Or what do we want to go after, which might mean we have to add some additional people so we have more capacity. And so one of the things I look at is the average revenue per client engagement. And so I looked historically at what we had. I looked at, well, based on new service offerings, additional value we can provide, maybe new efficiencies we've gained, new capacity we have, new capability we have, what could it be? So I take my historical information, I apply some assumptions, and I came out with this number of, if this is our revenue goal and this is our average revenue per client on new work, we would need to add, I think it was something like 65 new small business outsourced accounting and advisory clients in the year. Like, okay, all right, let's do it. Well, you have to do the gut check. Like 65 new clients in 1 year, is that realistic? So I go to my partner, I think when Monica's even on here, I go to Monica and I say, okay, could you do 65? Last year we did 20. Could we do 65? And no, we can't do 65 unless we do a bunch of things different. Like we have to add more people, we have to streamline our processes. Like if you can find 65 people, that's one thing. That's a marketing problem, right? Being able to onboard and deliver service in a quality, consistent way to 3 times as many people as we did the year before without changing some specific strategies, that's what modeling does for you. It tells you, okay, this is either unrealistic or it's going to take some very intentional strategies to get there. And a lot of times as business owners, we're comfortable with the vision and we jump right into strategy and we miss this step to pencil it out and really see if our strategies are going to get us where we're going or if they're not even realistic at all. And so once you have that in place, you can go to this third step of evaluating your progress. You have more clarity around what you need to do and how you're going to get there so you can start monitoring your progress as you go. So start incorporating scenario planning and forecasting into your strategic planning process. Pencil it out. It doesn't have to be fancy. You don't need, software. You don't need some big software system. You could use some very simple Excel models. There's lots of tools that you can use easily. This doesn't have to be fancy or complicated, but consider being more specific and intentional about your revenue growth goals, your profitability goals. Maybe you need to incorporate a consistent cash flow projection. Maybe you need to implement some what if scenarios. Just start penciling things out as this one step before you start executing strategies that might not actually get you where you are trying to go. All right, so those are the 5 blind spots of growing businesses. So as leaders, you want to move forward strategically. You're proud of the growth that you are having. But as your business grows and scales, there are blind spots along the way. And you may be feeling like one or more of these obstacles stands in your way. It's easy to feel stuck. And it can be surprising, like the growth you worked so hard to achieve all of a sudden created new problems. And so I think part of this is just recognizing that this happens to a lot of small business owners. These are common. The reason that I can talk about these 5 things is because we see it over and over and over again with the small businesses and nonprofit organizations that we work with. I see it in our own firm as we grow and evolve. And maybe you're not a business owner. Maybe you are leading a division or a certain component of your company. These same things happen within divisions, within business units of companies, or within new product lines. It's a matter of growth. As you grow and change, new problems and challenges come along the way. It's just part of growth. And so if you can start to expect these and use this as your blind spot monitoring system for your business, we can learn a lot from mistakes that we make, right? Failure is a really good teacher, but it can be a painful teacher. So if you can learn from somebody else's mistakes and prevent problems before they strike, I feel like that's an even better way to learn. So as you think back through these 5 blind spots, most likely one of these blind spots exists in your business right now. So maybe you've reached your limit and there's got to be a better way. Or maybe your gut feeling for what's happening in your business is no longer accurate. Maybe you're spending a lot of time putting out fires instead of preventing them. Or perhaps you have more cash than you're used to and you just don't want to waste it. Or you have a vision for your future, but you're not sure if it pencils out. These are blind spots that happen. And no matter what stage you're in, whether it's startup, growth, or maturity, it can be frustrating to face these new challenges, especially when your plate is already packed with responsibilities. And so use this presentation as a blind spot monitoring system. And we also have another tool, another resource for you to go even deeper on these blind spots. We have a free ebook on this topic that goes into more depth about each blind spot, how you know if you have it, what you can do about it. And for you attendees of this Top 5 event, we would love for you to have that ebook for free. You can download it by going to tdtpc.com/2021 top 5. And there you'll be able to download that ebook, refer back to the content. I also know that Christina will send out a recording of today's session so you can listen back. She can provide the slides as well, but that ebook is also a great resource that goes into more detail. And then one other thing that we're doing for Top 5 attendees is we're going to have a Q&A call tomorrow. So tomorrow morning, we are going to have a free Q&A with myself and two of my partners, Justin Plate and Monica Sullivan. And so you can ask us any questions that you want. It can be related to any of the 5 blind spots or just other questions that you feel you'd like to ask a CPA, and whether it's about PPP and things going on with all of that, or taxes, accounting, anything. We just want to have another chance for you to ask questions of us and see if we can help you really take action on these blind spots or other areas of your business that you really are looking to grow and thrive in 2021. So if you go to that URL, there will be a place for you to download the ebook, and then also a place for you to register for that free Zoom Q&A that will be going on tomorrow morning. All right, so Christina, I know you've been watching the chat. Does anybody have any questions they've already put in, or does anybody want to drop a question now? We've got a little bit of time here.
Yeah, so one of the questions that came in was just toward the end was, there's a lot of the EIDL loans, the PPP, the grant money that would be extra money that they have. So wanting to just guidance on preparing that properly on how they use their burn rate or what they use it towards. Any advice on that?
Yeah, and I might even invite Justin Plate, one of my tax partners, on. If Justin has been working with a lot of clients on evaluating which is going to be the best program for him to use. Christina, are we able to unmute other people? It looks
Christina,
like he is.
This is Justin Plate.
So I'll let.
And could you repeat the question? It was a little bit, it was breaking up on my end, so I didn't catch it all.
So one of the questions we had, you referred to extra cash. So the PPP, the EIDL loans, the grants that are coming through, just any advice on how to use that best in this situation when they have that extra money?
Yeah. We've got a lot of clients that have been asking that, and a lot of them are, to be honest with you, holding it in reserve because they just don't know what's going to happen here with COVID. PPP specifically obviously has to be used specifically for payroll costs and other qualifying costs, rent, utilities, health insurance premiums, and employee benefits, state payroll taxes, and then the new PPP Round 2 that's just being released right now expands that to certain vendor payments, payments for personal protective equipment. Grants, depending on the grant, can be used for a lot of things, or they can be very specific on what they need to be used for. So I would maybe, you probably need a little more detail on what grant specifically people are talking about, on what they can be using those for. But overall, a lot of these business owners are just using it to manage the day-to-day operation, especially for some of our hardest hit clients, especially in the food and beverage industry. There's really not a whole lot to think about where it's got to go, because there's a lot of just immediate need on where it can go. But for the businesses that are still doing okay, many of them recently have been looking at ways they can expand their offering or add new revenue streams to match up with how the economy and how the consumer is spending their money in the new COVID era, and how can they maybe tweak their business to better fit the new normal, so to speak, and add revenue streams by using some of that money to expand and diversify their business.
Another question that came, oh, go ahead, Courtney.
Oh, sorry, I was just going to piggyback off that and say, like what Justin was just mentioning there at the end, knowing how your company makes money, having that level of detailed reporting where you can actually tell your margins, and then matching that up with what do my customers need from me right now? Like, what am I good at? What do they need from me? And what can I deliver profitably is the perfect way to think about how to invest that excess cash or that buffer that you have, so that you can, like Justin said, find ways to be more relevant and make good use of those funds.
Another question is on the projections and how often they should be doing this, when every month is not, basically it's saying every month is not predictable of the next with COVID. So any advice on how often they should be doing that right now?
Yeah, so when there's a lot of volatility, you need to be doing it more frequently. So if your business is really, so let's talk about cash flow projections as one example. So cash flow projection, this is where you're looking at on a month-by-month basis under normal times, on a month-by-month basis, how much money do I have right now? How much do I think is coming in, and how much do I think is going out, to predict, where am I going to have problems? As I'm growing and expanding, maybe I need to spend some money up front to invest in things, or maybe, there's a time of year that's more seasonal, or what you're just predicting to see, so you can be out ahead of an issue of, I'm going to have to invest additional capital. I'm going to have to get an expanded line of credit. It's a common tool that business owners should be using in stable times on a monthly basis. If there's a lot of volatility and uncertainty, which could be said of our current state for most business owners, we suggest you do it weekly. And I know that seems like a lot, but if you, instead of doing a monthly projection, do it every single week. I know it's more granular, but nobody likes negative financial surprises, right? Like, most financial surprises aren't positive. Most of them are negative. So doing it more frequently, and I know I get the kind of the point of the question is like, well, I don't know what to expect. That's why you have to do it more frequently, because you have to adapt your assumptions as things change. So maybe isn't what you want to hear, but realistically, that is what is going to be the most valuable to you, is to increase the frequency of those projections and tweaking your assumptions when things are changing rapidly or there's less certainty around what you're predicting.
I think that's all good advice. Cash flows that I've counseled on are kind of all over the board. And as mandates come out, one day it just changes their business, which will impact the next week. Other questions, feel free to drop them down in the chat. Just any kind of, obviously this is the first session for 2021, and these are amazing as we look forward into another year that's really not predictable, but anything else that you guys want to add? I know obviously taxes are coming up. Any advice on that as they prepare, as hopefully some other people drop some questions in there? This year will be unlike any other if they had PPP and other things. So things to maybe eliminate surprises as they prepare.
Yeah, I think so. As we look back on, the last several months and back to even March and April when PPP Round 1 came out, and then PPP Round 2 coming out here very recently, I think what we have talked about a lot that it's been kind of a big picture challenge for business owners is not just like, well, am I eligible, or what do I have to submit to apply? It's really having the financial information they need to be able to tell if they're eligible, and to be able to provide the supporting documents to their lender for forgiveness or for application, because a lot of businesses just don't have timely, accurate financials, and that's foundational. So I think, for a lot of business owners, that's not their thing. It's not like they're either relying on their gut, or they just don't have a good system in place, or they're checking their cash balance and kind of letting that be their guide for how they're doing. But I think what we have seen is that this has really elevated the need for having accurate, timely financial information, so that you can tell how you're doing. And if there is an opportunity, which usually has a short window of time to apply, that you've got what you need, and you can tell right away, I need this funding, I qualify for this funding, I've got what I need to submit it. So I think if you're a business owner who has traditionally only worked with your CPA at the end of the year to make adjustments and get ready for your tax return, you're probably missing an opportunity to have better financial reporting throughout the year. So you can tell how you're doing, and then use that as the foundation for some of these other higher level things like projections and forecasts and key performance indicators. You can move from having the financials really only be designed for reporting for your tax return and maybe reporting to your lender once a year, to being a critical tool for how you measure how you're doing and the underlying basis for how you predict and start measuring where you're going. So that's one thing I would say. And Justin, do you have anything you want to add? Justin might have a different, like a whole nother perspective just from a more tax standpoint as well. Or Monica's on, I think, as well.
No, I think those are all good points. I would maybe point out, this is more of a technical perspective, but one of the items with the PPP funding that came through, and I'm sure everybody's seen it, but again, a good reminder is PPP Round 1 and Round 2, now for that matter, Congress did act, and all of those qualifying expenses that you spent those PPP dollars on are fully deductible. So there was a lot of question going back and forth with the IRS last year, whether or not clients, business owners were going to actually be able to deduct those expenses, even though the IRS came out and said, no, it's not tax, it's not income when it's forgiven, but you can't deduct the expenses. That was just a fancy way of saying it was income. You're going to end up in the same spot either way. But Congress did act on that at the end of the year, and all those are fully deductible. So that was a very good news item for all business owners, and also a very pro-taxpayer change. So a lot of clients, maybe clients or business owners actually, potentially made some decisions at the end of the year based upon not knowing that, having that uncertainty and not knowing whether or not we're going to be able to deduct or not deduct those expenses. So there might be an opportunity as you move into tax season this year, maybe changing some depreciation elections or some of those things after the fact, because if you went out and bought some equipment to try to offset the non-deductible piece, you maybe have a few too many expenses potentially than where you were hoping to be. So again, kind of back to Courtney's point, doing the planning is really one of the critical things we believe with all of our business owners. Is if you can have good, accurate information, you can do some planning and really know where you're going to be at, and then make some good decisions at the end of the year. So.
All right. I don't see any more questions in the chat, but if anybody has one specifically they want to turn their mic on real quick and ask, that's completely fine. Otherwise, we'll start to wrap up. But just a reminder, we do have all our top 5 posted online. They usually happen the last Wednesday of the month. So they're very focused on recovery. And obviously this is the first one we wanted to put out there, because if you don't have your financials and you're not looking at them, nothing else is going to work in the business. So Courtney, thank you so much for your expertise, and Justin and Monica, I know you're on too. Thank you all for jumping on here. I did post the information about tomorrow again in the chat. So if anybody wants to jump on, again, that is a free session, just Q&A with them. No commitment on your end. It's from 10:30 to 11:30 tomorrow. The link is on there as well. And as well as the free ebook that goes more into depth of the presentation and what was covered today. There's a lot more information we could dig into. So if no one else has any questions, we'll go ahead and wrap up today. I did also drop Courtney's email in the chat over there if you need to reach out to her personally. She is completely fine with that. So please feel free to send her a message as well. So thank you all for being here today, and we'll look forward to seeing you again next month.
Thank you, Christina, and thank you everybody for your participation in the chat. I would love to be with you live in person, but was glad to be able to deliver this virtually, and thanks for participating in the chat. We'll pick some winners and send you some gifts from our favorite Central Iowa small businesses. Thanks for being here.